Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day, how you going? Welcome to the podcast. Hope you've been enjoying yourself. Recording this after a crazy weekend of rain in Sydney, and I think Sydney got a couple of months of rain in a matter of a day or two, so trees down everywhere and a lot of bedlam out there, but it's good to be here and it's not too bad today. And we're recording this on the day it's being released, so this is really good. We'd like to keep really fresh and current with what's happening, and I've been tuning in right across the nation in terms of auction clearance rates and spoke with a whole bunch of real estate agents this morning just to get a bit of a feel for what's going on out there. And every single person, I think it feels, is out there looking at properties for sale. And even within Sydney, and I don't want to be too centric here, a whole bunch of people here in the office were out looking at properties over the weekend, and they just said how many people were out there looking at stuff despite the rain. So lots happening in the markets right now. There's not a lot of stock on market here in Sydney and also in Melbourne. Competition for property is pretty tight, so you'll see that reflected in auction rates moving forward, and we'll keep a close eye on this over time. And as you know, if you've been tuning in recently, there are a whole bunch of different dynamics of factors which shape property markets. I had a great chat recently with Simon Presley, and we looked at all those things which do influence what happens to property markets. So if you didn't listen to that, go and tune in. But today, and I've been saying, we're going to be doing a lot more of this sort of stuff, question and answers. So hearing from you, those of you who connect in with the Smart Property Investment podcast, of which there is, I think the numbers for last month have just come out, and there's over 100,000 people connected in with the podcast over January, which we get a real kick out of. And it just reminds us how we need to be making sure that we're being very current with the content that we are delivering to you. So question and answers, hearing from you what you think, what you feel, and getting some responses around that. Helping me with that today is Emma Ryan. She's the editor of Smart Property Investment. She's back in the studio. You're going to hear a lot more of her. Emma, how you going? Were you out shopping for property on the weekend?
I was not out shopping for property on the weekend, but I know of some people that were in the office. So yeah, you're absolutely right. I think the attention is very hot for property at the moment.
It is. And
renters as well, actually.
Oh, renters, yeah. Well, the renters out there, but already I can see the frustrations. I spoke to two different people who are looking for a property right now, and they were just already fatigued by how much energy and effort they're putting into it, viewing properties and going to auction and stuff for going way beyond what they thought. So this is just the market that we're in right now, and get used to it, people, because until there's a lot more stock comes on markets, there is a demand for property right now, but not many properties for sale. So supply and demand, that's what it's all about. Q&As. So editor at smartpropertyinvestment.com.au is an email you need to know. If you want to send in a question, please do. You can also do it just on the end of articles. There's a comment section across every single article that it's every article, isn't it, that we reduce?
Yeah, absolutely. So the comment section is open on our articles. So yeah, make sure if you do have any thoughts or any questions, get involved on that as well, because we trace those and monitor those as well. And it's really interesting to see the type of attitudes that people have about certain stories, I think.
Well, it is. It's funny. The comments you get on at the end of articles are often very different to the comments you get when people write in or do it via audio. I think comments coming on at the end of articles sometimes a bit more frosty or hostile.
Definitely, yeah. I mean, it's the benefit, it's the pro and con, I suppose, of having an anonymous comment section. But I mean, yeah, it's good for honesty, and it's good to know where people are actually thinking and what they're thinking about. Yeah,
it is. And we get a lot of comments also via the podcast where people listen to it, irrespective of it. But most people listen on the iTunes app, and they leave a lot of questions there as well. So we monitor and map that, and we'd like to keep connected with that going on. But what we did introduce earlier, I think it was a new thing for this year, was our new audio question. So where people can click wherever you listen to this now on smartpropertyinvestment.com.au, you can click the sort of record now button, and you can actually send us an audio question. So we're going to do a lot more of that, and we might kick off with that today. Emma, we've got James, our trusty producer here, ready to press a button. Is it going to work? That's the first time we've done that. An audio question. James, over to you. You want to play it?
Yeah, I'll bring it up now, Phil.
Okay, here we go. Let's see how good it is.
G'day, Phil and team. I really love the show. So my current situation is I have $450,000 to spend. I'm currently living at home with the folks, and I want to buy my first property. So my options are, firstly, 1, moving out of home, getting a first homeowners grant and saving myself in stamp duty, or 2, staying at home with the folks and just buying an investment property purely for that and seeing how that goes in that wave. So I'd like to hear your thoughts on that and which option to take. Cheers.
All right. That works pretty well.
There you go.
I like it. It's a nice, easy question as well. First came off the rank. And I'll preface this response with a disclaimer. I know it's you're going to yawn. Here we go. But I'm happy to sort of have a discussion around this, Emma. But it is just a general basic discussion as well as all the other stuff we cover off today. There's no advice here whatsoever. This is just our view of it. So before making any financial decision, in particular when it comes to a property, make sure you go and see a qualified advisor, of which we chat about a lot on smartpropertyinvestment.com.au. They are out there. Go and find one so you can make more informed decisions. But we didn't get a name, did we, James? Was there a name on that?
Yeah, I've got a name here. It was from Billy.
Billy. Okay, thanks, Billy. Mate, really appreciate it. Good question. You hear this a lot and you don't sound very old. I'm going to make that assumption. It's not like some 50-year-old guy still living with his mum and dad, right? So my view of this, and what's your view, Emma? Let's start with you. I've got a particular view on this, which might be different.
Well, I can tell you what I did do, but I don't know if mine is quite relevant to Billy's position here, just because I was living in Sydney and I purely, perhaps a little bit naively, went into the property market with the full intention, and it was no, I guess, option for me, or I wouldn't make it an option that I would go in as an investor first off. I wanted to be out of the rental game. I was sick of, my rent going basically down the toilet and just someone I didn't know. So I wanted to go out and I wanted to buy my first home. I think obviously there's a million ways that you can do that, and there's people a lot more qualified to offer that sort of words of wisdom than me. But the way I did it, I had a long-term, plan in place. So I think I was about probably even about 16 when I first started to think about buying my first home.
Really?
And yeah. But I always wanted my first home. I think the idea of the great Aussie dream, lived inside me from a very young age. And it was something that my parents and I always talked about around the table. So, essentially had been saving since I was 16 with that full goal in mind. And I just didn't even think about going out as an investor first, if that makes sense. So I don't know, if you're in the situation where you can be living at home with the folks for a long time, I think you should go for it. That's my personal view. I think you're going to be probably much better off if you do that and make a wise investment rather than just, trying to get in like I just was so desperate to. But yeah, I think each to their own, really, isn't
absolute
it?
horses, of course. So you purchased recently. Was it this year or last year?
It was last year. So mid last year.
Year, and that's for somewhere for you to live.
It was, yeah.
And you live there now?
Completely, yes.
Okay.
Yep, correct.
So you bought your principal place of residence first rather than being an investor first.
Yeah, exactly. Yeah. I did. And that just goes back to what I was saying, just, really just wanted to get into the market, but really wanted to do it as a first-time buyer and living in that place.
That's cool.
Yeah.
And you can change your mind as well, right, at the point in time. Once
Definitely,
you've lived into it for a period of time, it means that you're satisfying the restrictions that might be around the first-time owners grant, which is different in every single state. So, so you'll invest next. Is that the idea?
Definitely, yeah, absolutely. And since I'm not just plugging this because I work here, but since I've been obviously writing and doing these for Smart Property Investment, it's definitely, on the cards.
It's a good education.
More hungry. Yeah, absolutely. I just wish I found out about it first of all, before I became a first-time buyer. I think so many people, first-time buyers in particular, get lost in the trap of just not doing research in the sense that they're going to news sites or resources like Smart Property Investment, they're just looking at data, and that's all great as well, but it's interesting to see and hear other people's perspectives about how they've gone about it, and that's something that we can really offer.
Yeah, and I completely agree with you, and the way you've done it is not necessarily the way that everyone else should do it as well. So that's a great thing about being a property investor, which something I see time and time again when I chat with investors, whether or not they're sort of self-employed or a lot of them are PAYG employees, it actually allows them to be the master of their own domain. They get to make the decisions, and property investment is an enabler for wealth creation. So it allows people to do it. And Billy, to your point, it just depends what you want to do, right? 450 grand is fair whack. I don't know where you live right now. As a property investor, 450 grand can get you in the market and get you into something, pretty good outside of Sydney. If you want to buy in Sydney and you want to operate on $450,000, you're going to struggle to get anything really. You can go way out west if that's where you want to be, and maybe jag yourself an apartment out there at 450k. But you sound reasonably young still. I don't know whether you work or you're at university. My view of this is, as a younger person, and if I think of what I've done, you want to keep yourself as fluid as possible. So if you buy a property to live in, Billy, and you want to live in it over a period of time, that's fine. But, as a first-time buyer, you're going to get some benefits out of it. So whether or not you're buying here in Sydney or Melbourne or Brizzy or wherever you're based, as a first-time buyer, you need to live in it, and you have to do it for a period of time. And again, that changes depending on the state that you're in to satisfy those requirements. But if you buy a property and you want to live in it, that means that you're stuck with it for quite some time. And if you want to go off traveling or go and see the world or go and work somewhere else globally, you've got that sort of hanging around that you need to be satisfying that mortgage while you're away. So you need to be thinking about how your lifestyle connects in with, your drivers as a property investor. And, if you're happy and you're comfortable, you've got no plans to move anywhere, and you can see yourself doing the particular job you've been doing for quite some time, that's probably, not a bad idea to buy something to live in and really work at driving down the debt that you have against it with view to invest elsewhere. But, I spent most of my 20s just being a 20-year-old, causing a lot of trouble and not being wed to any one particular spot. So, and that worked for me. It was pretty good. I didn't have a big mortgage hanging over me sort of through my 20s. And now that I'm not in my 20s anymore and I started investing in my 30s, there's a lot more responsibility when you have a mortgage, right, Emma?
Absolutely, yes.
You can't just go, I don't want to work no more, right?
No, absolutely not. Wouldn't that be great one day, and to be able to have that sort of wealth generation from a property investment strategy? But yeah, certainly that is actually a really good point, Phil. I'm in my 20s as well, and you do have to sacrifice, obviously. I mean, everyone says that, but I think the extent to which you do have to sacrifice is worth thinking about and taking seriously, because you can't just go on a holiday just like you would if you didn't have that tying you down, So, but then the pro is that you've got a beautiful home that you've worked really hard for. So it just depends on how you want to do it and when you want to do it as well.
Yeah, it's all about when. I think it's a bit of dichotomy. The earlier you start investing, the longer you are in property, and therefore if you start investing in your 20s, you should see 3 to 4 property cycles before you choose to retire, right? So that's cool. So the sooner you get in, the sooner you can realize the benefits from it. But the sooner you get in means that you're changing your responsibility dynamics.
Yes,
and
absolutely.
If you choose to have a mortgage, you need to service that mortgage, because if you do not service that mortgage, you're going to have troubles in the future trying to get loans, right? So you got to work that out, Billy. Now, to get into where you should invest, I think you don't even think about that yet until you work out whether or not you want a big mortgage hanging around your neck or you want some flexibility. Now, if you've got a big deposit, you can afford 450 grand and you can go and get a mortgage, well, you might want to be thinking about investing, and it means you can continue to save your money, stay at the home of mum and dad, and hopefully get your washing done and your food cooked, right? Enjoy it while you can, because don't rush responsibility if you can avoid it. But anyway, that's my view. Billy, happy to take or extend that out anymore. Just get in touch with us, editor at smartpropertyinvestment.com.au. And thanks for sending that audio question through. All you need to do the same is click the record now button, send it in. It's really, really easy. And we're going to go to a quick break, and we'll be back in a moment with more questions. See you soon.
If you're a regular listener to the Smart Property Investment Show, then odds are you're already a property fanatic who loves hearing stories on investing from real people, the good, the bad and the ugly. Be with people just like you and join the group Passionate Property Investors on Facebook now. Become part of a community who know what to do and when to do it. And the time to do it is now. Passionate Property Investors. Tribe, tools and tips. Find us on Facebook today.
Welcome back, everyone. Here with my colleague Emma Ryan, editor of Smart Property Investment. We're just doing a bit of a Q&A episode. Billy just sent through the first ever audio question and we answered that. I don't know, he's probably sitting there going, really, they didn't give me much. But what we hope we've done with that is post some of those questions, not to talk about the mechanics of property and how to make money out of it. You got to work out what you want to do in life before getting the property. When you're ready to get in property, don't rush it, because when you are in it, it's good, but you got requirements and responsibilities around it. Question here, 2020 apartment predictions. Quick sort of synopsis of the article. It said the 2019 calendar year saw much discrepancy in terms of opinions on the apartment market. Looking ahead, here's what one expert is predicting to play out in 2020. It's talking about Mr. Wilson, which I imagine is Andrew Wilson. He was talking about stock levels were tightening, sales of properties prior to auction would continue to be popular, which we sort of touched on earlier. Properties in higher brackets, inner city lifestyle locations, et cetera, et cetera. So the question here, or a statement also, is It says, rubbish. There is massive fear for new apartment buyers in Sydney due to the deficit crisis. New apartments in Brisbane's valuations are not stacking up by $30,000 to $40,000. There are property scams everywhere with cashback offers and huge commissions paid to financial advisors and planners to suck their clients in. It was too good to be true. It generally is. And that's from Paul Mulligan. Thank you, Paul.
Can't get more honest than that, can you?
No, and to be fair, his sentiments are, I don't want to get into Mr. Wilson's predictions here, but around the sentiments of this particular piece here. And, yes, it is when you're buying apartments, particularly off-the-plan apartments, and we speak about it all the time on smartpropertyinvestment.com there. I know a lot of people who've done it very, very well out of this, and it's been an exceptional opportunity for them to invest off the plan. I also know a lot of people, maybe more people, who have probably been hurt quite a lot buying off plan. And just to give some context, where I live, there's an apartment that was built, apartment block behind us that was built, and the person that bought the block or bought the apartment off the plan has now got it listed probably 20 to 25% less than what he paid for it 2 years ago. So he's hurting quite a lot. And this is just a product of market movements. And, the whole idea of buying off the plan is to buy at today's prices with the view of selling it or realising the value of it in tomorrow's prices, which is all very good if property market's going up. But if they're going down, as they have done in Sydney over sort of the last 2 to 3 years, that's when people find themselves in a spot of bother. So to that, Paul's sentiments hold true. Also, it is buyer beware as well. You have property marketers whose job it is to sell this stuff off the plan and nice glossy brochures. And, by and large, most project marketers are really good at what they do and they deliver value to their buyers. But there's also big fat commissions plugged in there for these guys to sell these properties. What's your view? You've written a lot about this, Emma.
Yeah, I have. Yeah, I think it's actually a pretty common sentiment. What we've just got there. But the apartment market in general, it's such a cause of debate, it seems like. And I think going back to when I was a renter, I rented out a metro apartment back in Lane Cove on Epping Road there.
Okay, yeah.
And it looked, shiny and glossy and beautiful. But then, basically the second I moved into it, it's just fraught with problems, things breaking down all the time, having to go back and get the owner, fixing it and all this sort of stuff. And I don't know the exact price of what it would have dropped, but I would be very, very surprised if it didn't. Probably over the same time period, actually. That's 2 to 3 years since we've seen it.
And that's your experience as a renter, right?
Yeah.
So moving into an off-the-plan, were you the first person in there?
Yeah.
Yeah, so moving in there as a renter in an off-the-plan apartment, it was less than ideal.
Absolutely. Yeah, it was terrible, actually. I quickly realised the mistake, and then, of course, you're locked into a 12 locked in commitment-wise.
Did you use the word bloody just then?
Yeah, I did.
Yeah,
in the country. Sorry, this is late in the afternoon. My brain's going weird. Yeah, but it was interesting because as a rental, obviously you've got the benefit of just it's not really your problem, it's the owner's problem at the end of the day. But as well, living there was just a bit of a nightmare. Just one thing after the other would go wrong. We had the toilet mix up a million times. We had the doors that were locked and not locked. And, it was just a bit of a disaster all around.
So you couldn't break the lease? Were you complaining all the time saying, fix it, fix it, fix it? Were they responsive? You're getting it fixed or it just...
No. Absolutely awful, if I'm honest. I don't want to obviously name call them out, but just wasn't an ideal situation and tried to break the lease. But, they're obviously pretty insistent about having someone in there and understandably so. But, when you get, as a renter, if you're promised something and it looks great and then the second you move in there and it just falls apart, it's not an ideal position you want to be in. It's not
cool. And that's not great for the actual investor because, what you want to be doing as a property investor is creating value, and that value is in capital growth, or you also want to be getting a good yield out of it. So number one, if you've got a disgruntled tenant, they'll move out and then you're stuck with a property that's not generating any income. That's bad. Number two, it is very much a supply and demand type of scenario. But when you have these big new builds happening and you have a lot of properties for rent, so if most people aren't owner occupying, if they are all investors, what happens is that you don't have the positive pressure or the upwards pressure on rents. So you end up with apartment blocks that are empty all the time. You've got to discount your rents, or if people start desperate, they start discounting their rents. That means you've got to bring yours down, et cetera, et cetera. There's a lot of headaches around it, but that's not to say new build or off the plan stuff isn't right. Now, this particular story was talking about 2020 apartment predictions. So, not all apartments are brand new and off the plan, right? There is still some very good assets out there in terms of small block apartments which are established and being the market. And we've got a lot in our portfolio, the Smart Property Investment portfolio. Great assets, small blocks, red brick type stuff, 2-3 stories. And I speak to a lot of experts around this, buyers agents, and likewise, a lot of them still see a lot of value in these type of assets.
Yeah, no, I'm sure. Absolutely. I think, you can get lucky, you can get unlucky with these sorts of things as well. I think the lesson is you just have to do your research and you have to be pragmatic about this sort of thing, don't you?
You do, yeah. And going back to Paul's comment here, his main thrust of it is valuations not stacking up. So this is when, to I mentioned, when you commit to the purchase of a property at a particular price and then the bank sees that value very differently at the time when you actually get the key. So you still need to pay the same price that you agreed to on the contract. Now, if banks aren't lending you that same valuation, you got to find that money somewhere or you default, and that's not a good place to be. So we've written so much about this. Just go to smartpropertyinvestment.com.au, just search for off-the-plan apartment or apartment valuations and go and check it out because there's a lot written about it. This is not a beat up on off-the-plan stuff. As I said, if you time it right and you buy the right asset that has the right developer or the right builder, which builds the quality, you can do very, very well. The flip side of it is when you end up with these Opal Towers or mascot apartment type stuff. And there is a huge oversight now from the government in terms of ensuring that building codes are up the track to ensure that investors and homeowners who buy these properties actually get what they're paying for. But it is sometimes smoke and mirrors and buyer beware. So we're going to go to another quick break. We'll be back in a moment.
Are you 100% satisfied with your current property manager? Tired of chasing them for updates? Is making more money from your property investment important to you? With your Bonza, you get one platform, one point of contact, and one low management fee. For greater ROI from your property investments, visit landlordroi.com.
Welcome back, everyone. Phil Tarrant here, host of the Smart Property Investment Show. I'm with my colleague Emma Ryan, editor of Smart Property Investment. Relatively new role for you, isn't it, this editor role?
Yeah, a couple of months now.
How's that going?
It's gone really well. It's gone quickly, actually, but there's a lot happening, as you know, and as I know, so it's exciting.
Any hate mail coming in, or is everyone pretty complimentary?
Not yet, yeah.
Okay, editor of Smart Property Investment.
Bracing myself, but so far so good.
What's the main feedback you're getting from people sort of over the last couple of months in this new role? I know property investors are a great community to be part of. They're really passionate and hungry for information, aren't they?
Definitely. More investor stories is what they want.
More investor stories. How do we tell more investor stories?
We get people on here and they talk to you for half an hour about their journey and the pitfalls and the opportunities and all that sort of stuff. But I think that is definitely one of the main bits of feedback. People love hearing from other people about what they've done that's great and what's not so great as well.
So if that sounds like you and you want to come and have a chat with us, and you can be like Emma, who bought her first property in her 20s as on occupied, or if you want to start off like Billy as a property investor maybe, and I reckon he might go that way, and I want you to report back to us, Billy, with whatever decisions you make in terms of your property journey, all the way through to those of you who have large, multiple, you're more sophisticated investors. Come on and tell your story. The community loves it. It's a great way, peer-to-peer learning, to help people make more informed property investment decisions, and I get a real kick out of it, as does Emma, speaking to property investors from right across the country. So you don't necessarily need to come to the studio. You can do it sort of via some of the voice chat stuff or video chat stuff. We can do all that. Get in touch with the team, editor at smartpropertyinvestment.com.au, or you can send a direct message via all the social stuff, Smart Property HQ. Please do that. We're going to do one more question, Emma, and this is from an article that we wrote a little while ago. East Coast markets tipped to dominate property in 2020. And I'll do a quick synopsis on this. Following a year of two halves for property investors in 2019, strong momentum is tipped to drive markets in 2020, according to a finance expert here. Some really good quotes about it. Go and search online, East Coast properties tipped to dominate property in 2020. Now, the question around it from our right is, it appears that regional cities are outperforming the respective CBDs. Is that trend likely to continue? Well, it depends who you talk to or who you listen to. As I mentioned beforehand, we had Simon Presley on the podcast, I think last week or the week before, and he's a huge advocate of the regional markets. But again, he's very specific about where and how he does invest regionally. A lot of the reports I'm hearing of regional markets, that they continue to be strong in terms of yields. Whether or not there is the upwards price pressure there for those investors who are looking for capital growth. You're going to have to look long and hard around it. He would point to, it depends if you want to call it regional or not, but Tasmania sort of over the last 3 to 4 year period had huge growth in capital values. Some would say that it was just, 10 years too late, or it took 10 years for that to happen. But again, this comes down to how you construct a portfolio, how you balance your portfolio with metropolitan or CBD markets versus regional stuff. And the best investors I know often have a very balanced view to this, where they'll use regional properties with their high cash flows or strong yields to supplement maybe some inner city locations which might not have the yields but have the capital growth potential. So they balance their portfolio out with regional properties to produce income and are basing or backing most of the capital growth to come out of the metropolitan markets. With this story here, we could write this any time at any given year, at any given moment, and it would still be relevant. East Coast markets tipped to dominate property in 2030, for example, right? Fast forward 10 years, we'll be having the same conversation, won't we?
Yeah, absolutely.
That's the way it works. But it was a year of two halves for property investors in 2019, and you'll hear people bandy around these themes, and pretty much what they're talking about is that the first half of 2019 was all about uncertainty when it came to the government, what might be happening, and obviously it was an election year moving into the federal election, of which the coalition is still in power. There was a lot of uncertainty in terms of what would happen with negative gearing, what would happen with capital gains tax. There was a lot of people who were investing in their super or elderly Australians not too sure about the franking credits side of things. It was really tough to get financed. No one really knew what was going on with the economy. And the second half of the year, everyone, as soon as the election happened, they entered it with a lot much more certainty around what life is going to be for property investors or those seeking to create wealth through property. So that's the two halves. And as soon as there was some understanding of what's going on, property markets really rebounded in many ways. And we're seeing that right now, aren't we, with everyone's back from Christmas and property markets are starting to sort of get into gear.
Yeah, absolutely. I know we already mentioned this, but going back to auction volumes and stuff, I actually just wrote a story that's going to be published tomorrow. It was that they've doubled week on week in terms of across the combined capital cities, I should mention.
The volume has.
The volume has.
Okay, so more properties.
Yeah.
So do you reckon that's a product of, because of the nature of the market and competition for properties, everyone's taking their properties to auction on the hope that they're going to get a lot more for it?
I think so, yeah. That's certainly what the economists are saying, what CoreLogic is saying as well. So I think, that's going to be a bit of a trend that we see. I know that you can't obviously base everything off the auction volumes and auction clearance rates and all that, but it was an interesting observation for sure. Week on week had doubled. So,
well, it goes to show that, chatting with real estate agents, there is slowly more property starting to come on market. There is a big demand out there. Finance, talking about this tale of two halves, finance is getting a little bit easier for investors. Serviceability requirements are come down from banks. There's a lot of competition from the banks to attract the right type of mortgage business. So the people out there, and money is cheap, who want to invest in properties. So like if I was selling a property right now, I'd probably take it to auction, because if there is that demand there for it, it might put some pressure to get a better price on it. But Emma, I think we've done pretty well there. Thanks for your time.
No,
really
my
good.
pleasure. Anytime.
Remember, editor at smartpropertyinvestment.com.au is where you need to send all your questions, or if you want to put your hand up and come on the podcast, you're the right person to chat to about that, Emma.
Yes, absolutely. Get in touch with us. As I said, more investor stories. So be thrilled to have you on board.
And I would say more investor stories, and I'd say I want more investor stories from the girls out there.
Yes,
That's
definitely.
what we really want to see a lot more of, because typically, and I don't want to generalize here, but the female contingent of a relationship are normally the one which is driving most of the financial decisions. So we want to get more of the girls in here telling us what's going on.
Yeah, it's the case in my house for sure.
Is it?
I like to think so anyway.
Well, you're making all the smart and the wise decisions, and don't leave the guys to that. They'll just mess it up.
Absolutely.
So we want to hear from you. These are the stories we want. So, and Emma's happy to host those chats as well, which we want to see more of. So thanks for your time today, Emma.
Thank you.
Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, so the first to know what's going on at property, it's smartpropertyinvestment.com.au/subscribe. Social media, Smart Property HQ. And please keep those reviews coming wherever you listen to this podcast. The team here get a real kick out of it. 5 stars if you think that's what we should be getting. Otherwise, you can leave your comments here as well, and we get them answered live on air. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.